Hello traders, this is StrayDog's weekly video for July the 7th. So as always, I will go through the larger time frames of these following indices: S&P, Nasdaq and Russell from the US indices, and German DAX. This past week we had a pretty significant thing. 3000 level on the S&P was tagged after the G20 meetings were over, and we had a shortened trading week. And in the holiday spirit, the US markets tagged the 3000 level in front of the 4th of July. So next resistance come around 3030, so that is only like 1% higher, and it is the only resistance that we could find for now on the S&P chart. Now S&P and Nasdaq also are going higher with the bearish divergence, and all that markets care right about now, and what they want from the Fed is to get a rate cut. We shall see about that on Friday. We got a bit of a down move after the better than expected NFP report, when market was reacting on the possibility of Fed not cutting rates. But that is the lower odd scenario. Higher odd scenario is that the markets are going to get rate cut, but the question that all traders are asking right now is how much of this rate cut hopes is already calculated in the price, since it is widely expected that the Fed will cut rates this month. Now, out of the news, we will have the Powell week next week, because we will have Fed Chair Powell 3 days in a row. Now, on Tuesday he's got his speech in Boston. Fed Chair Powell will testify on Wednesday and on Thursday in Washington DC. And also we got on Wednesday FOMC Meeting Minutes, on Thursday Eurogroup meetings and the US news, and on Friday we will have Chinese trade balance, ECOFIN meetings, and again some of the US news. Now let's go to the charts now. Okay, let's start with the larger time frames. This is the weekly chart of the S&P Cash Index, and this prior week we got a break above this resistance here. On Nasdaq, which is a lagging index, we got the test of the all-time high, and on Russell, which still lags behind quite a bit from the S&P, now it is again here near this resistance field. Let's look at these same things on the daily chart. Continuing higher was the higher odd scenario. 2 weeks before that we got this bullish pennant here. Market went higher above the previous all-time high, which was here, tested this previous high from May this year, and then got stuck here at this first trend line and made a pullback. And after that we got a move higher. Now next resistance comes with this line, which is much more significant than this, because these are the anchor points, and we still didn't get the first test. That first test will come around 3020, maybe a bit higher, and that is currently the only resistance we have to the upside. Now market is strong for now, and buyers are in full control as long as they're holding the line here, as they're holding this field which comes around 2950, buyers are in control. Now there could be several scenarios here for the future movements, and the S&P is the most significant index, most important index for us to watch right now, no matter what we are trading, because all of these other indices will likely follow its lead. One of the scenarios is that market reacts here on this resistance, maybe try to roll over, and then we will have the first aggressive support will be around 3000, and next support is going to be this field, because this field around 2950 wasn't tested so far. What we could also get is a move right through this, like smashing through it with no reaction at all, like this, what we had on beginning of the 2018. Now that is a move. It's also like, look at here, it was a move into the all-time high, so they made all-time high here. And while you could observe how parabolic and crazy this move was, you couldn't possibly know where it is going to end until it did, until they start to roll over. So this could also happen now. That is one of the scenarios that market doesn't care about the trend line, it's just going higher until a point when it is so overdone that they start to roll over. Now everybody who shorted this anywhere here with some day trading or swing trading stops got stopped evidently, unless they got a lucky pick somewhere near the top. So you never know how far it could go. So that is one of the scenario. In my opinion, a lower road scenario. I think higher road scenario will be some kind of reaction here, at least pulling back to the 3000, because moves like this, moves that don't make any pullbacks, are prone to this, to sharp pullbacks, to sharp long liquidations, because they didn't made any pullbacks, and those pullbacks are necessary because those are in the future good support areas like we have now here. And that is why I think when the market hit this, and if it hit this trend line, it could roll to the 3000, it could roll over to here, and that real test for buyers is defending this area here. That is one of the scenarios. The overall scenarios is the market doesn't have the strength to go to here and just slowly drift, and all activity here becomes a false break above this area, and we just roll over again to the daily 50 or daily 200 or to this area here, which represents a really good support. So basically those are the scenarios. I think the higher order scenario is that we get some kind of reaction here, and then judging that reaction, if it is a shallow reaction or reaction just to the 3K, and from 3K you get another a batch of new buyers that are ready to push market higher, that could be the sign and a tell that market is really strong and that markets want to go higher. So we could also look at the S&P and also other indices on the 4-hour chart and observe that this move to the upside is with the visible bearish divergence all the way. So between these two tops, then between these two tops we have visible bearish divergence. Now that doesn't really have to mean all that much, because when you observe bearish divergence in the strong uptrend, it could just mean that a pullback is coming, and to be ready for take action somewhere like this. We had here a bearish divergence, market pulled back to the first support and gone higher from there. But when you have bearish divergences that are stacking, so several of them in a row, now that is any information that carry more weight than just one bearish divergence. So market is usually going to lose some steam at these higher levels, at testing the previous all-time highs or like this. So this is really a good big round number, a good place for all of these buyers to take some chips out of the table. And it was normal thing for us to see a bit of a pullback like on Friday. Now market is in this region where you don't have anything to the left, so this is now a bit trickier to judge what comes next. Now let's go to observe a German DAX a bit. Okay, this is the DAX daily chart, and as we can see here, DAX is still around 12,600, and also on DAX buyers are in control with the price, with just holding the price above this here area, so above 12,460. Buyers are firmly in control. They don't really need to do anything wild now just to keep price here. They could go sideways for some time and then try to attack this next larger time frame resistance area, which comes around 12,800 to 12,890. On the DAX cash index chart, we could observe unfilled gaps. And first gap that is unfilled to the upside is the older one from August 2018, or 12,676. And also there is a possibility that DAX could first go down a bit. Look how big this field here is. And to just fill this gap from June the 28th on 12,399 first, and then to go higher and fill this gap and try to go higher into this area here. So that area of resistance from the daily chart is here, this top is here. And on the 240-minute chart, we could observe that unlike the S&P, DAX doesn't have bearish divergence. It is going higher without it, and it is still inside this well-formed trading channel. So for now, as long as they are keeping the price above 12,460, buyers are in control. And possible scenarios, as always, are again retest of this area, test of this area which we didn't get so far, possibly filling that gap on 12,399 and going higher from there, or there could be a test this resistance, or there could be in the filling of this 399 gap a move below that, which could invalidate all of this, and from there we could roll over to the downside, maybe even go lower to test this 12k level, or even daily 200 again. But for now, all of these markets are in the bullish mode, in a neutral bullish bias for larger time frame. All of them are waiting for the Fed to cut rates, but as said at the beginning of the video, it is really a question how much of these rate cut hopes are already calculated into the price. And of course, keep in mind that next earnings cycle is beginning around July 17th. It is the official beginning of the earnings in USA with Alcoa, and in Germany I think SAP as the biggest DAX component will start first. And of course, if you are interested in trading German DAX, I'm inviting you to check my site. Here it is. The address is StrayDogTrading.com, and on the homepage of my site you can learn about my service. It is Daily Dose of DAX service, analytical service for DAX traders. Here you can find what I am providing. And that is basically it for this edition of weekly videos. I wish you a good weekend and good trading.